Okay, good evening. Hi everybody. This is my video on my 5 stocks that I like right now for 2020, valued underneath $5 per share. Now, why am I doing this? What's the reason behind this? What's my objective? What am I trying to accomplish? I want to be able to, first of all, get a lot of folks started on investing in the stock market. And at this time, while we're going through this global crisis, I believe that today presents an exciting opportunity for investors that may already be investing in the market, and also new investors as well. Let me see. I want to start off by saying a couple things. First of all, I am not a financial advisor. I'm going to be giving everybody my feedback on 5 stocks that I like and that I think have the potential to explode in 2020. These 5 stocks are all priced underneath $5 per share. Now, one thing I need to mention is that these particular stocks, they are considered high risk. So it is important that every person who ever decides to invest in the market, that they understand their tolerance for risk. There are much more safer companies that you could invest in. But what I tried to do in terms of a portion of my investment strategy, I try to find winners where I can have 3x gains, 5x gains, 10x gains. That's important to me as an investor. I typically buy only stocks that I expect to have for the long term. I'm a long-term investor. So I want to share with you guys these 5 stocks. Now, I do have to not only again mention that I'm not a financial advisor, but I'm sharing with everybody my opinion. I'm not telling you what to go out and buy. It's important to go out and do your own due diligence. In addition to that, I also want to let everybody know that all investments, they do involve risk, and that past performance of a security or an individual's trading strategy, it does not guarantee future results or returns. That's important. It doesn't matter who you're following, whether I'm giving you some advice or you're watching CNBC or you are listening to Jim Cramer. It doesn't matter. It's important that you at the end of the day do your own due diligence, you do your own research, and you invest your money where you're comfortable. So let's dive right into some of this. I want to say that I think that in terms of where the market is today, we've been here before. Many people are calling this a recession. Many people think we're headed towards a recession. There's many different opinions on that. My name is Thyrone Cameron, and I've been investing in the stock market now for over 10 years. So again, I'm going to be sharing with you guys not just a little bit of the knowledge that I have, some of my personal strategies and some of my personal opinions, but this is who I am. I grew up in the GTA, the Greater Toronto area, and I invest in the stock market. I am pro cryptocurrency. I like real estate a lot as well. So I like to consider myself to be somewhat of a diversified investor. Now, one thing I do want everyone to do, if you're not following me on social media, you can re-follow me here at facebook.com/Thyrone Network. Go ahead and follow me. And if you're watching this on YouTube, do not forget to subscribe to my channel. Do not forget to hit the like button And also, don't forget to share this with a friend and add your comments on it as well. I like to engage with any new or existing investors. If you got any stocks that you want me to take a look at, please send me that information. I'd love to take a look at them, and I'd love to engage in a conversation about what you like, what you're looking at, some of the pros and cons, and we can have that kind of discussion. And I enjoy seeing and hearing about a lot of different opinions. In my personal view, the market today has presented what I like to call a black swan event, and this is a unique opportunity for investors who have positioned themselves well. That's who I am. Now, the very first stock that we are going to dive into, it's an industry that I think has a lot of potential. One thing I do want to say is very important is that you only invest what you can afford to part ways with. So, I can go over this in a different video, but in terms of, your earnings and the income that you earn from whatever it is that you do, your place of employment, if you're self-employed, I believe a fraction of your earnings should be invested. And I think it's important that you have a strategy, but you also just get started. Often I think that too many people wait to have thousands and thousands of dollars before they get started in the market, and that's just not necessary anymore. Typically, your average commissions for a trade will range anywhere from $5 to $15 depending on the brokerage. But I highly recommend, if you are in Canada, Toronto, like myself, then you can use any of the 5 major banks. Questrade is also a discount brokerage. I don't recommend them, but if you want to find something that is a little bit more cost effective, and again, you just want to get started, that's the point, get started. People always try to time the market, and I think it's more important that you spend time in the market versus trying to actually time it out. So the very first pick that I'm going to share with everybody is Aurora Cannabis. Now, Aurora Cannabis is a very interesting company. Let's take a look at it. I'm using tradingview.com. This is a platform that you can use as well. Current price of Aurora Cannabis is $1.03 per share at the close of the market on March 27th, Friday, March 27th. Market closed at $1.03 US. Aurora Cannabis is also traded on the Toronto Stock Exchange. You can see here on the chart that Aurora Cannabis has had quite the tumble in the last little while. So specifically using TradingView, I can switch from one day, what that action looked like, the last 5 days, the last 1 month, the last 3 months, and the last 6 months. Let's take a look at the last 1 year chart. You can see that this stock has fallen quite a bit. Now, what's happened with Aurora Cannabis? A few different things. One thing is black market competition. That has been a challenge. It's a new space for a lot of industries and for a lot of people and for a lot of investors. As a result of that, the black market is still a place where people are getting their cannabis. And a lot of these weed companies were the darling of 2018, 19. You could have made a lot of money depending on if you got a chance to participate in any sort of IPO, which is an initial public offering, or if you had the opportunity to get involved with this kind of company earlier on. So let me show you on a 5-year chart. You can see that Aurora at one point was priced well below $1 per share. That was back in 2016, 2017. It started to rise up to about $2, and it went as high as over $10 per share. I know a lot of investors that got in early and they got out. They're not strong believers in the market, but I believe that there is a massive opportunity with these cannabis companies once they get it right. So one of the things I want to mention about Aurora is that some of the challenges they've had has been supply barriers. They've also had some challenges with licensing. The margins at this time are pretty small. A company like Aurora, it has the potential to unfortunately run out of cash. That's going to be a challenge that they have as well. There is potential for high growth with the company because they made some changes. And the changes that they made is no longer focusing on quick expansion. And that, in my opinion, is going to be one of the benefits of Aurora moving forward, is that they're no longer going to be expanding as quickly as they initially wanted to in 2018. And this gives them a chance to focus more on improving their margins, and that then removes the focus on expansion and new infrastructure development. I gotta quickly say, I make these videos, it's my feedback, it's my opinion. I don't edit these things. So someone said to me, hey Tyrone, you should try to, make your videos a little bit more professional because the information is good. I'll think about it, but for now, I'm just gonna hit the record button and just start talking. So keep listening if you're liking what you're hearing. That is Aurora Cannabis. Aurora Cannabis is my first pick. It's at $1.03 US per share, and that is the first pick that I'm going to share. Next, what do we got? Plug Power. Okay, so Plug Power, cost per share of Plug Power at this time, it is $3.72 per share USD. Now, Plug Power is an interesting company. It makes hydrogen fuel cells that power hydrogen cars. It is an alternative to gas. And the cool thing about Plug Power is that it functions essentially on hydrogen. And hydrogen does last longer than conventional batteries. There's many advantages of hydrogen fuel cells. Number one, it's readily available. Number two, it does not produce any sort of harmful emissions. Number three, it is environmentally friendly. Number four, it can be used as fuel in rockets. Number five, it is efficient. It is renewable. And then there are some disadvantages as well with a company like Plug Power. It's expensive. When it comes to hydrogen fuel cells at this time, it is still expensive. Number two, it is hard to store. That is still a challenge in the market today. Number three, it's not easy to replace existing infrastructure. It can be considered to be highly flammable. It is dependent on fossil fuels. Now, what you can see from this particular chart, if we take a look at the last 1 year, is that this price has gone up quite a bit. But if you look at the last 5 years, you do see that the price ranged just a little over $2. When you see where this company was back in the year 2000, it's lost a lot of its value. In fact, it's lost over 90% of the value. So that's overall what's happened with this company. This company has lost a ton of its value, and it's just kind of putted along, at least you could say for the last 10 years. Sorry. Now, for the last 5 years, you've started to see Plug Power spike up a little bit. Specifically, if you look at the last year, you've seen an increase in the share price. In fact, to be specific, in 2019, shares rose over 175%. So in my opinion, Plug Power is a very attractive investment. I like their hydrogen fuel cell technology. I think that there's many advantages to it, and let's see here. One of the other pieces that I want to share specifically about Plug Power, and outside of the fact of that it's environmentally friendly, the efficiencies have been improved. The U.S. Department of Energy, they say that that hydrogen fuel cars will have a significant advantage over electric vehicles, although today the craze is completely about electric vehicles, and that's where the hype is. If you look at a company like Tesla, everybody today is interested in electric vehicles, and electric vehicles are the thing right now that everybody's talking about. But I believe that a hydrogen fuel cells, which is what Plug Power they create, it is an attractive opportunity for an investment that is under the price of $5. Next, Stage Stores, symbol SSI. Now, Stage Stores, let's pull it up, is currently trading at 40 cents USD per share. Okay, now let's take a look specifically at the 1-year chart. This is the 1-year chart, and you can see where Stage Store was in May of 2019. Throughout 2019, the price pretty much stayed the same, started to rise from October to early 2020, and then, like most stocks at this time, it has taken a bit of a tumble. And Stage Stores is unique. It operates specialty department stores, and this is primarily in small and mid-sized towns and communities in the United States. The merchandise portfolio comprises moderately priced and brand name apparel, accessories, cosmetics, and the company also offers merchandise direct to the consumer through its e-commerce website. As of August 2018, it operated about 764 department stores in 42 states under different brands. Beela's, Goodies, Pebbles, and 63 Gordmans as well. So the company was founded in 1988, and this particular company was founded in Houston, Texas. Now, Stage Stores, they did report earnings per share of about 60 cents, revenue of about $369 million for their last quarter. And this is one of the companies that I think has great growth potential. So let's take a look at their 5-year chart. This tells you where Stage Store was. This was at one point above $20 per share. Again, now it's hovering on the 40-cent mark. But it did end off 2019 very strong. And it did have a good start to the year 2020 until most recently. Like all stocks that have taken quite the hit, Stage Stores as well has taken a hit for sure. The revenue in 2018 was about $1.6 billion for Stage Stores. Again, the company was founded in 1988. CEO has been the same since 2012 by the name of Michael Glazer. And I think this is a company with some major potential. In the last 52 weeks, the high for the share price was $9.50. And this is all information that you'll be able to see as you start to investigate stocks. It's going to give you those kind of details. It will let you give you information about the financials. It'll give you information about dividends, if dividends are paid to shareholders. And so this is the kind of information that you're going to be able to get as either new or existing investors that are going to help you with making investing decisions, provided that you wanted to get and jump into the market. Okay, so Stage Stores is the third company. Fourth company, Workhorse Group. All right, so Workhorse Group. Current stock price for Workhorse Group. Let's see here. Workhorse Group Incorporated. Current share price is $2. So the Workhorse Group is a electrical vehicle company. It is incorporated as an American manufacturing company based in Cincinnati, Ohio. The focus is on manufacturing electrically powered delivery and utility vehicles. The company was founded in 1998. CEO is Stephen Burns, and they employ over 120 people out of this organization. Now, there's a few things that I like about Workhorse. I believe that it's the future of delivery. It's a 100% electric vehicles, low floor design, and they've got a proprietary telematics system developed by Workhorse. So this multi-platform application allows you to track and monitor the performance of all Workhorse vehicles in the fleet and collect data that you need to optimize your routes, planning, and monitor maintenance. So I think that this is going to be something very beneficial to business owners. Let's take a look at the chart. In the last 1 year, this is what the 1 year chart looks like. In the last 5 years, this stock has reached above $10 per share. Again, it's currently trading at $2. In the last 1 year, the price was under $1, and so it started to pick up a little bit of momentum. And just about with every other company that's out there now, took a bit of a dip due to the the pandemic that's happening in the world right now, and as a result of that, every stock pretty much has taken a bit of a dip. But we started to see things turn around here in the last 3 days. I don't think it's actually turned around. I think that we've had a few good days, but we'll see what the market shakes out over the next few weeks. Now, one of the cool things about this company is that in 2019, Workhorse, they purchased an old supply plant from General Motors, and that gave investors a lot of confidence. This is a company that was mocked for their really ambitious plans. And word is that Workhorse made it to the finalist for a big contract to supply the United States Postal Service. Now, the year-to-date gain in terms of the industry that this is in is an industry that we've seen substantial gains from. And a lot of investors now have started to again see a lot more confidence in this company, particularly after the move was made from the purchase from General Motors in 2019. That is Workhorse Group, and the price is $2 US per share. Now, fifth and final, Blink Charging, symbol BLNK. So Blink Charging, the price is $1.89 per USD. This is a stock with a lot of volatility. Now what they do is they have a web of electric vehicle charging stations. And this particular company supports a trend in electric vehicle adaptation. The company has landed a few big deals. They have secured a deal with the country of Chile for 200 electric vehicle stations, and they've also secured a similar electric vehicle station deal in the country of Greece as well. $43 million the market has predicted. So the $43 million company in the market has been predicted to grow, and that's at a 40% annual compounded rate. So, this is a $43 million company in a market that is predicted to grow at a 40% annual compounded rate. So I think that there's huge potential here for this company here as well. Blink Charging, we can look at their 1-year chart. Let's take a look at the 5-year chart. 5-year chart again has shown some really high highs and some really low lows. So this is a company that at one point was as high as $34 and has come down quite a bit. So again, this is one of the 5 that I think has got a lot of potential for the year of 2020. Let's see if there's anything else specifically about this company that I wanted to share with everybody. I cannot recall. There was something else that I did want to share about Blink Charging Station that I can't recall at this moment. If I remember it, I'll leave it inside of the comments below. So these are my 5 picks. My 5 picks for what I like for 2020 is Aurora Cannabis, I like Plug Power, I like Warehouse Group, I like Blink Charging, and I like Stage Stores. So feel free to tell me exactly what you guys think. Give me your comments, give me your feedback. I want to thank you guys for watching. Encourage everybody, if you're not investing in today's market, if you've got the disposable income, I highly recommend it. Leave your comments below. Like and subscribe to my channel. Leave your comments. Like this video. Subscribe to my channel. Talk to you all soon. Thanks.